Good morning this Thursday, the 24th of August. I'm Grady Wolf, market analyst with Bell Direct. A decline in bond yields paired with the anticipation for the release of Nvidia's quarterly results fueled Wall Street to close in positive territory overnight. The Nasdaq extended its rally into a third straight session, adding 1.6%, while the Dow Jones rose 0.5% and the S&P 500 gained 1.1%. After the closing bell, Nvidia, the chip-making stock leading the AI hype in 2023, reported quarterly earnings results, including record revenue up 88% in Q2 from Q1 to $13.51 billion and record data center revenue up 141% on Q1 to $10.32 billion. Net income popped from $656 million in the 3 months ended July 31st, 2022 to $6.188 billion in the 3 months ended July 30th, 2023. The outlook for the third quarter was a key inclusion of the report to determine if momentum for AI and semiconductors is slowing. But it appears it's still all systems go, as Nvidia revealed outlook for revenue to be $16 billion and GAAP and non-GAAP gross margins are expected to be 71.5% and 72.5% respectively. When Wall Street awakes on Thursday, all eyes will be on the Nvidia share price. The benchmark, a 10-year Treasury yield that hit its highest level since 2007 on Monday, dipped more than 11 basis points overnight to 4.21%. Which increased investor appetite for equities. Inflationary pressures and expected cooling consumer demand are weighing on apparel giants in the US, like Nike, as the sports brand fell for a 10th straight session on Wednesday, while Foot Locker tumbled 28% after reporting a decline in sales and lowering its forecast for the second time this year. Over in Europe, markets closed marginally higher across the region on Wednesday, led by a jump in utility stocks, adding 1.1%. Germany's PMI figures were released overnight, showing a steep downturn in manufacturing output, alongside a plunge in business activity. The Stock 600 rose 0.4% on Wednesday, Germany's DAX added 0.15%, the French CAC lifted 0.08%, and in the UK, the FTSE 100 rose 0.68%. Locally yesterday, the ASX closed 0.38% higher as strong gains for consumer staples, materials and consumer discretionary stocks offset the tech sector's near 5.3% decline. The reason for the tech sector slide was on the back of WiseTech Global tumbling 20% on weaker than expected guidance for FY24 and a return to acquisition growth strategy, which will squeeze profit margins. Santos shares hit a 1-month low yesterday after the mining giant released first half results, including profit diving 32% due to lower oil prices and softer production levels. Woolworths released FY23 results yesterday that sparked a rally for the supermarket giant, a day after competitor Coles reported disappointing results. In FY23, Woolworths reported group sales up 5.7% to $64.3 billion, which does cement the company's leadership position in Australia's supermarket industry after Coles posted group sales revenue of $41.47 billion, which was growth of 5.3% on FY22, which did fall short of Woolworths' growth. Across the broader metrics, Woolworths excelled in FY23, including gross margin as a percentage of sales rising 26.8%, group EBIT up 15.8% to $3.116 billion, NPAT up 4.6% to $1.618 billion, and the final dividend rose 9.4% to 58 cents per share, while Coles held the final dividend flat at 30 cents per share. In response to the strong FY23 results, investors sent the WOW share price up 5% intraday, and Woolworths shares closed the day up 3.5%. Ahead of the new local trading session today, the SPI futures are expecting the ASX to open at 0.51% higher on the back of that rally on Wall Street overnight. On the commodities front this morning, oil is trading 1.24% lower at $78.65 a barrel. Gold is up 1.03% at $1,917 $100 an ounce, and iron ore is up 3.21% at $102.5 a tonne. One Aussie dollar is buying 65 US cents at 93.87 Japanese yen, 50.33 British pence, and 1 New Zealand dollar and 8 cents. And now let's dive into some trading ideas for your consideration this Thursday. Bell Potter has downgraded the rating on Cedar Woods Properties from a buy rating to a hold rating and have slightly increased the price target on the company from $5.20 to $5.30, following the release of the company's full-year FY23 results. For the year, Cedar Woods reported turnover increased to $391 million, which was stronger than expected due to higher settlements falling in June. A slight decrease in the full-year dividend to 20 cents per share was also announced from 26 cents per share, and no guidance was offered for FY24. The reduction to a hold rating is on the back of Cedar Woods shares performing well in CY23, up 23% from December 31st, 2022, and trading at a 9.9 times FY24 expected EPS. The recent share price strength means Bell Potter expects shares to mark time until there is more certainty in the path of interest rates and guidance from the company. And Bell Potter has decreased the price target on WiseTech Global and maintained a hold rating on the leading global provider of logistics services and software services following the release of the company's FY23 results. While the FY23 results were in line or slightly above Bell Potter expectations and the company's own guidance, the guidance for FY24 EBITDA was below Bell Potter and market expectations, driven by recent acquisitions, thus changing the price target to factor in lower than expected margins as the company undertakes an acquisition growth strategy. And that's all we have time for this morning. Happy Thursday and happy investing.